Hello guys, welcome back to yet another lesson, and in today's lesson we are going to look into how you can get to do multiple time frame analysis, and I'm going to show you all that in this chart. So it's very crucial for you to pay attention so that I get to take you through how I normally get to conduct it, and I'm going to show you real time on the market. So pay attention, and of course take pen and take pen and of course somewhere to write, that is a notebook, since it's important for you to take some notes as you get to move further. But before we get into that, if you're wondering where you can get capital to trade, I have good news for you, since we have this platform. Actually it's a platform which is giving out accounts from $10,000 going up, and of course all you just need to do is to achieve their daily or their maximum profit target, and then from there they're going to fund you for you to have the capital to be making profit. And of course the profit split is usually 90% and they get retained by 10%. If you're new to the channel, just go ahead and make sure you hit the subscribe button. And for now, let's just go ahead. I get to share my screen recording, I get to share my screen charts, so that you also get to see how I get to do exactly this. Well, to start with, I normally start, since I've said this is not the first time I'm saying on this channel, I'm usually a day trader, so I normally start my analysis from 4 hours time frame. So let's just head to the 4 hours time frame, and then I get to show you how exactly I get to do my analysis. So from 4 hours time frame, first thing first, I normally do, I get to identify the trend at 4 hours, and I get to do that by the help of the 50 EMA, that is the moving average, the 50 moving average. With that, if the market is above, that is, it's above the if the market is above the 50 EMA, that gets to show us that the market is on an uptrend. So like for this case, you can see the market is on an uptrend, that is for 4 hours. So it's important for us to always trade with a trend. So from here, the other thing I need to know to identify, I normally get to draw my zones. For this case, you can see I've already drawn these two lines. In our previous lesson, we talked about how you can get to draw zones. So for that case, you need to make sure you get to draw a very nice and a valid zone. For instance, you can see this one with the zone, the market has touched this area a couple of times. You can see it got to touch it here, we got to touch here, we also got to touch here, and the market got to unfold downward. Also the market also tried to go through this zone for another time, and then it really unfolded downwards. So as you can see here, this one is what we call the liquidity grab, meaning they just grab the stop losses which were just placed above the zone, and then the market starts unfolding downwards. So after you get to draw the zones at the 4 hours, it's important now we get to narrow down to the 1 hour time frame. So with the 1 hour time frame, we also need to make sure the trend, the 4 hours trend, also gets to rhyme with that is for the 4 hours. For this case, you can see the market is still above the 50 EMA. So for this case, we'll be anticipating the market could be making a pullback before proceeding to go up. So the high probability is that the market is still on an uptrend. But there are also other factors which get to come on board, whereby you might check the RSI as well as whether the market has touched this trend line a couple of times. For instance, you can see the market has touched this trend line more than 3 times. You can see these 1, 2, 3. We also have 4, 5. Technically, this market could unfold downwards, since we have seen already the market has been showing some momentum going downwards, but we need also to incorporate something called Fibonacci for us to have another confluencer which is going to help us to really know where the market is about to unfold. So for that case, if you get to pull a Fibonacci, let me just get to come here. So Fibonacci is a concept that I'll be showing you in details on different lessons, since it's important for you to also know how you can get to apply the Fibonacci concept. So for this case, I can say let me just pull the Fibonacci from the upward going downwards. So for this case, you can see if you get to pull the Fibonacci until to this point, you can see the market just touched the 0.618, and then the market is unfolding downwards. So if we were to trade this market, we'll be looking for selling opportunities, since one of the confluences is that you can see the market has already touched more than 3 times the trend line. Of course, you can see there's some loss in the momentum going upwards, and you can see sellers are really coming in. So what we should be looking for right now, we should be looking into the psychological levels. So I'll be showing you how you also get to draw psychological levels to know how you can get to see whether the market for sure has touched these regions and it's really struggling to go downward. So if you get to draw a psychological level which is around 250, that is 1.2600, you can see that's a region whereby the market got to touch and it's really struggling. So we can get to place our zone around that region right there. So if you get to place our zone right there, you can see right there around that region. So what we need to do, we can get to pull our short position and we get to place our stop loss right there, and we get to target our previous lower low. So for this case, I would suggest you just since we have already seen the market unfold, we could place our stop loss just above the psychological level, which is around there, and that one would comfortably give us around this is 1:1:1.2 clean. And of course what we should anticipate is that at the minute the market gets to break this trend line, we should be anticipating the market is going to unfold downwards for a while, and of course we should be looking for selling opportunity right now as we speak. So if you're done with the 4 hours and then you're already done with the 1 hour analysis, it's time now we get to the 15 minutes time frame. So for this case, what I normally get to look at, I get to look at a possible chart pattern formation. So if you can get to look at this is a W pattern. It's also a combination of the head and shoulder, and of course with that, this is the head and shoulder. We are anticipating the market might move the same distance here, and it might be going the opposite direction. So it's important for you to take note on that. And as you can see here, it's just retesting this zone, and of course the market is going to unfold downward. So that's something I can get to get into this trade right now. But since I normally trade London session, I don't just get to jam into the market. So what I'm saying is that I just go ahead, make sure you get to understand exactly what you're doing, and of course get to follow every time frame analysis and make sure they get to support each other before you can get to dive into a trade. For that case, you can see the market at 4 hours, it was showing you an uptrend. When it came to 1 hour, it's shown an uptrend. But when it came to 15 minutes, you can see the market is about to break the trend. That is the 50 moving average, and it's almost about to go the other side. So it shows you that in the longer time frame, we are looking to go down. We are looking for selling opportunity. So that's how you get to place your trades. And of course, we also have other factors such as RSI divergence. You can see as the market was going up around here. Let me just draw a line here. As you can see, as the market was going up here, on this other side, the market was just somehow relaxed and going downwards, meaning to show you that the market is about to go down for a while. And with the RSI divergence, that should be an enough confluencer to show you how fast, to show you how far this market can unfold. And of course, for my case, if you have seen me trade, I normally make sure my stop loss doesn't exceed 30 pips. So that's something I've been training myself over and over, and I've really stuck with that principle for a very long time. So I'd suggest also for you to come up with some setup which they get to help you to make more money. And of course, just stick with one setup and it's going to pay you in the long run. So that's for the case of the multi-time frame analysis. In case you have any question, talk to me in the comment section and I'll be happy to take you through where you could be having some hardship. Have a good time, and of course, if you haven't hit the subscribe button, please do, and of course turn on the notification bell so that I don't miss these kind of videos each and every time I have a new episode, guys.